Hello, Assalamu alaikum, students. This is your teacher Azka, and I teach business and accounting to O levels, A levels, and Excel students. Okay, so first thing before starting this paper, I just want to tell you, not tell basically, I just want to request you that I have seen that there are a lot of views on my sum of video like O levels business when I have solved paper business one paper one business for O levels, and that paper was the latest paper. It means 224 Feb March. So I have seen like there are a lot of views on my different videos, but there is no growth on my channel. Like I am doing very like hard work for you guys, but still I'm not getting a lot of subscribers. So this is because like there are a lot of students who just watch my video, but they don't subscribe my channel. But if you subscribe to it, so of course it means that you will be getting, you know, a lot of more fresh content and like valuable content for your studies, which will be, you know, beneficial for you in your exams. So that's why I this is just my a simple request that whenever you watch my video, just make sure that you should subscribe my channel. Okay, so now let's start. So this is paper one, and this is Fab March 2024 accounting IDCSC paper 1 variant 2, and we have 1 hour 15 minutes to solve all the whole paper. So as usual, I'm just going to start my MCQs from the very last MCQ, which is 35. Okay, so this is my 35 MCQ. So let's see. Um, so a trader decides to write off the balance owed by the current customer. Okay, so basically this is kind of bad debt as an irrecoverable debt. A credit entry is made in the account of credit customer and debit entry in the irrecoverable debt account. Which accounting principle are being applied? So as you can see that we are following the double entry system here because we are crediting the customer account and debiting the irrecoverable debts account. So it means that we are following the double entry system. But with that, what is the other system we are following? What is the other principle? So we know that there is a prudence concept, and in the prudence concept, what we do, we just make sure that our profits should not be overstated and our losses should not be understated. It means that whenever you know that there is something, like for example, if there is chance or maybe if there is any expense incurred in a business, whether this is related to depreciation, whether this is related to provision for doubtful debts account or the bad debts, so we have to consider that expense or loss in the income means profit and loss statement. So it means that here we are basically following the dual duality concept, and you can say that double entry system concept. And the number two is the prudence. So in the first question is a business entity and realization. So we know that what is a business entity concept? Business entity concept that you are basically treating your business as an in like in business entity basically it means that your business has its own identity. It is an individual, like you can say that a person or a company. And realization means that we should not record the sales until it is made or until it's earned. This is a realization concept. Consistency means that we are consistent for our rules or our maybe regulations. Let's suppose if we are charging RBM on different technological non-current assets, so we basically have been applying this rule in our accounting, and this is a consistency that we are basically being consistent. And materiality concept, it means that we should only record those assets which should have some monetary value. So what if you see like we don't see anything regarding these concepts? Duality and prudence, yes, this can be our right answer because we just discussed here materiality and prudence. So again, there is no materiality which is like discussed here, and no prudence concept. So that's why C is the right option. So the next question, number 34. Okay. So why would a bakery business not include a value of inventory for stationery in the statement of financial position? Number A, it was to use in the next few months. So basically, if you see, like there are a lot of businesses who don't like, you can say that, count stationery as inventory. And the reason why, because this is very low level of value. And this is the main reason that why we don't count the stationery. So by understanding this concept, D is just like, we can say that is a good answer for it. But let's see the other. It was new and unused. So it's not like that. We are using stationery, and it was purchased regularly and paid for in cash. Again, this is not true, because we are basically not, we do not purchase a stationery on the regular purchase, on the regular intervals. So that is why this is not the right answer. So it means that D option is the right option. Okay. So our 33 MCQ. A limited company has invited potential investors to purchase shares in the business. Okay. What information would be of interest to a potential investor? So this is basically tested from the stakeholders chapter, in which you learned that what are the expectations of our stakeholders from our business, and why the financial statements is important for the stakeholders information. So let's see, first of all, the amount that they would pay for the shares. Yes, because of course, if your potential investor is coming into your business, so they want to know that how much they have to pay to purchase their shares. So this seems to be the right option. Second, expected future profits of the business. This is also true, because of course they will be thinking about it, because they know that if the future profit is higher, so it means that they will be getting higher dividend. Number three, the expected rate of dividend that the business might pay. This is also true. They will be complacent for the higher dividend. So that's why they will be thinking, like thinking of like these things, that how much expected rate we will be having as a dividend. Fourth, when the limited company will pay back the money invested. So basically, a company will never pay your money back if you are or if you are maybe ordinary shareholder, or if, for example, if a preference shareholder. So you can transfer your shares, you can sell your shares, okay, to anyone, but um, company is basically will be paying you the dividend on your invested amount, not this thing. So that is why four is not our right option. So one, two, and three. So A is the right option. Okay. So the next question is, a trader provided the following information. So we have the opening inventory, purchases, and the closing inventory. What was the rate of inventory turnover? So as you can see, that option is basically in times. So it means that we need to calculate the rate of inventory turnover in time, not in days. So this is very easy, because I don't think so like there is anything missing which we have to find out. So that's why this is very easy. We have the opening inventory, closing inventory, and purchases. So simply we will be just applying the formula of rate of inventory turnover. So rate of inventory turnover is equal to cost of sales over average inventory. So we know that first of all, we have to find out the average inventory. So what is basically the formula for the average inventory is that we have to add opening inventory plus closing inventory divided by 2. So opening is 8,000 plus closing is 16,000 divided by 2. So this will be giving us the answer 12,000. So 12,000 basically our average inventory and cost of sales. So first of all, let's find out the cost of sales here. Cost of sales is very simple. Opening inventory plus purchases minus closing. So opening inventory is 8,000 plus purchases is 108,000 minus 16,000. So we have the answer which is 100,000. This is the cost of sales. So just now put the amount on their required places. Cost of sales is 100,000 divided by average inventory is 12,000. So this will be giving you the answer which is 8.33 times. So it means that option C is the right option. Okay. So now let's see this question. Okay. So the question is that a trader does not maintain a full set of accounting records. He provided the following information for the year ended 31st December. As you can see that we have the year start information and year end information. And information is about the non-current asset, current assets, working capital, and non-current liability. During the year, he made drawings for of $35,000. What was his profit for the year? So as you can see that we can do the reverse working in order to find out the profit. So what is the reverse working? We can find out the profit by uh, closing capital plus drawings and minus additional capital if in the question if the additional capital is given, additional capital and minus opening capital. So this is the formula to find out the profit. So as you can see that we have the non-current assets, we have the, because to find out the closing capital and opening capital, what we have to do, there is again one more formula here to find out the capital. So we know that capital formula is capital is equal to assets minus liabilities. So if we want to find out the closing capital, so we just need the closing assets and closing liability. And if you want to find out the opening capital, so we need only the opening assets and opening liabilities. Okay. So now, mm, first of all, let's find out the closing capital and the opening capital. Okay. But if you see that there is one more hurdle here, and the hurdle is, if you can see that we have the non-current assets and we have the current assets, this is good, but we have the non-current liabilities, but we don't have the current liabilities. This is the main problem. But we have the working capital. So maybe if you know about it, that working capital is the difference between the assets, the current assets and the current liability. We have the current assets, we don't have the current liability, but we have the working capital. So it means that by help of opening working capital and closing working capital, we can find out the opening current liability and closing current liability. So how can we find out? So just stay with me, we are going to find it out. For first of all, just write the proper formula of working capital. So working capital formula. Working capital formula is that current assets minus current liabilities. So here I'm just going to find out the opening current liabilities. Okay. So now working capital Opening working capital was 6,000 is equal to current assets. Opening current assets was 9,000 minus current liability. We don't know about it. So just shift the current liability here, and here this is plus uh, sign. So now we are going to shift it here, so it will become minus sign. So 9,000 minus 6,000. So the current liability, the opening current liability would be 3,000. And now find out the closing current liability. So now again we are going to use this formula. So the closing working capital was 4,500 is equal to opening closing current assets were 7,500, and we don't know the current liabilities. So now just shift the current liability here and 4,500 here on the right side. So 7,500 minus 4,500. So we have again the closing current liability of closing is 3,000. So it means that current liability is the same. Now we can easily find out uh, the answer. Okay. So what's the answer for this? First of all, let's find out the capital at the end of the year and capital at the uh, start of the year. Okay. Okay. So first of all, capital at the end of the year. So non-current assets was 60,000 plus current assets was 75,000, and current non-current liability was 6,500, and current liability for the opening capital was 3,000. We just calculated it here. So altogether we have the answer for the closing capital at the end of the year is 64,000. Now just add drawings in it. So drawings were 3,500, and now minus the opening capital because we don't have any additional capital. So opening capital, non-current assets, opening non-current assets were 45,000 plus non-current assets was 9,000 minus non-current liability was 4,000 minus current liability was 3,000. So altogether, we have the answer for the opening capital is 53,000. So we have to deduct it. So at the end, our profit for the year is 14,500. Okay. So 14,500 is the answer for this question. So it means that D option is the right option. Okay. So now let's see the MCQ number 30. Okay, a manufacturer provided the following information at the end of his financial year. What was the cost of production for the year? So for cost of the production, just remember one thing, that not only the prime cost is the part of cost of production. Factory overheads, it means that all indirect cost is also the part of your cost of production. So now this is very easy. Add prime cost, which is 98,400 into factory overheads. plus work in progress at the start of the year and minus the work in progress at the end of the year. So it means that now this is very, very simple. So prime cost 98,500, add 17,800, add work in progress at the start of the year, which is 6,300, minus work in progress at the end of the year, which is 7,600. So we have all together answer will be 1,14,900. So C is the right option. Okay. So question number 29. Which cost of the manufacturing business are indirect costs? This is very, very easy. Heating and lighting of the factory. We know that indirect costs are the costs which cannot be directly attributable, and it is not easy to trace. And simply you can say that we cannot divide it on the number of units. So indirect cost is heating and lighting of factory. Yes, this is the indirect cost. Raw material used in production. So raw material is basically directly consumed to produce the goods or to produce the products. And this is showing us that this is not the indirect cost. The money you have spent to purchase these raw material, this would be your direct cost, not indirect cost. So B is not the right option. Rent and rates of factory, yes, this is your indirect cost. Wages of employees who make the product. So if these employees maybe if these employees were not making the product, but if they maybe were supervisors or maybe they were managers, so we will be considering them as a part of our indirect cost. But because they are getting wages for making the product, so it means that again you can trace, you can divide the wages of the employees on the number of products, and you can find out that what is the per unit product cost. So that's why this is not the right option. So it means that first and third. So B is the right option. Okay. So now let's see the other one. Tennis club provided the following information for the year ended 31st December 2020. Basically, let's see the requirement first. So what was the amount subscription included in the income and expenditure account for the year ended 31st December 2020? Okay. So as we can see that at 1st January, prepaid subscription was 1250. So this was the prepaid subscriptions. It means that we had received the subscription income at the end of the year of 2019, and that was the prepaid subscriptions. But we know that now it's been 1 year, so of course we have used this 1250. It means that we have given the services to our customer for this 1250. So that's why this 1250 would be the part of 2020 income. So that's why we have to add it, 1250. And if you don't maybe know that how to, what I am doing and why, like I am adding something and subtracting something, so you can follow your income account. It means that subscription account, you can make subscription account and you can put all the values according to the format. So at that time you will be having the same answer. Okay, during the year ended 31st December, subscription received for 2020. So because this subscription received in 2020, so of course this would be very much the part of the 2020 income. So we will be going to add it. Subscription received for 2021. So because this subscription we received for 2021, but we are going to find out the amount which we should write in the income statement for 31st December 2020. So this is not relevant to this year. That is why we will not add it. At 31st December, it means that at the year end, subscription owing for 2020. So it means that we have given the services to our customers, but they didn't pay $1,500. So what does it mean? But this is related to 2020 income. So whether we get paid or not, but because this $1,500 income related to 2020 income, so that's why we have to add it. So 1250 plus 9750 plus 1500. So you will be having the answer, which is 12,500. Okay. So the next question, 27. What is called up share capital? Called up share capital. So just remember that called up share capital means that once our shareholders uh, purchase our shares, but maybe they didn't pay us any single penny, so we will be calling them to pay their amount for what they have because they have purchased our shares, so that's why they have to pay us the total amount of their purchased share. So this is the called up capital. So let's see, amount received from by the company for issued share. So I have told you that this is basically not received by the company. It is receivable. So this is why A is not the option. Amount requested from shareholder by the company. Yes, this is the amount which is company will request to shareholders that please just pay your amount for your purchase share. So B option is the right option. But let's see the other one. The value of shares the company could issue. So we know that this is not showing us the value of the shares. Value of shares actually issued by the company. So again, in this question, they are talking about the value of shares. Basically, they are talking about the nominal or par value of each share. So in this question, we didn't find any kind of information which should be linked with this. So that's why this is not the right option. Okay, 26. What can cause an increase in the total equity of a company? Okay, so first of all, we have um, a profit for the year. Yes, because of this, your equity can be increased. Received for a long-term loan. So long-term loan will be increasing a liability, not the equity. Transfer to general reserves. Transfer to general reserve means that we just transfer some parts, or you can say that some amount from the retained earnings to general reserves. So basically, the money is not coming from the outer sides of the business. So that's why this is not increasing the total equity of the company. So that's why this is not our answer. An issue of shares, yes. When you are issuing the shares, so it means that you will be having some finances from the shareholders. So because of that, the total equity of the company will be increasing. So it means that 1 and 4 is the answer. Okay. So the next question is X, Y, and Z are partners sharing profit and losses in the ratio 5, 3, and 2. Their business made a profit for 8,000. They provided the following information. So partner salary, only Z is receiving the salary. Interest on capital 500 for X, 300 for Y, and 200 for Z, and total interest on capital is 1,000. Interest on drawings 50 for partner Y, 100 for partner Z, and total is 150. What was the Z's share of residual profit? Okay. So just make the format of the appropriation account. So first of all, we have the profit for the year, which is 8,000. So we know that first of all, we have to add drawings, interest on drawings. So we will not be writing interest on drawing for each and every individual. I will be writing the total of the drawings. So interest on drawings is equal to 150, and deduct the salary. Salary is 1,500. and deduct the interest on capital. And the total interest on capital is 1000 for all shareholders. So this will be giving us the residual profit, which is 5650. So what is the share of Z? So Z's share is 2, and add all the ratios to make a base. 5, 3, and 2 is equal to 10. So it means that Z's share of profit is equal to 5650 multiply 2 divided by 10. So 2500. Sorry, not 2500, 1130. $1130 is the Z's profit, Z's share of profit. So B is the right option. Okay. 24. What are the advantages to a sole trader of forming a partnership? Okay, so we have to just see the advantage. All partners would be entitled to drawings and dividends. So this is a disadvantage, not the advantage. Profit would be shared with the partners. So again, this is the disadvantage, not the advantage. Partners may bring additional skills and experience. Yes, this is the advantage of the partnership, because if there is only one sole trader, so he will be having limited skills and limited experience. But now if there are more partners in coming, so they will be coming with their own skills and expertise, and that would be beneficial for the business. So C is the right option. Fourth, the partners would share responsibility for running the business. Yes, again, this is very important, and this is the advantage of uh, uh, convert into partnership from the sole trader business. So it means that 3 and 4 is the right option. So D is the right option. Okay. So let's see the 23rd. Okay. Owner of a business took goods for his own use, but forgot to make an entry in the accounts. What was the effect of this error? Okay, so we know that whenever you have taken out goods for your own use, so this would be deducted from the purchases. So whatever the purchases are, let's suppose if the purchases was 10,000, and the goods which we have just taken out is equal to 2,000. So it means that it will be decreasing our purchases. So just remember that whenever our purchases decreasing, okay, whenever our purchase is decreasing, so it means that our cost of sales decreasing. Okay, and because of the cost of sales decreasing, okay, so because of the cost of sales decreasing, so it means that okay, so basically we didn't record this. Okay, so we didn't record this 2000. So if we didn't record it, so it means that we were not writing 8,000 the purchases, we were writing 10,000. So it means that we basically increasing our purchases. So if the purchases are increasing, so it means that your cost of sales would be increasing. And if your cost of sales is decreasing, so it means that your GP is decreasing, and hence your profit is also decreasing. So it means that your profit for the year would be understated. But remember that these goods will not be deducting from the capital. So that's why capital would not be affected. So C option can be the right option. Okay. 22. Which statement about a statement of financial position is correct? It is part of the double entry system. No, there is no double entry system in the financial position like the in SOFP. It proves the arithmetical accuracy of the accounts. No, it shows income and expenses for a certain period of time. So basically this is like it is related to profit and loss statement, not the SOFP. So fourth option is the right option because it shows the assets and liabilities on a certain date. Yes, so B option is the right option. Simon bought a new non-current asset. Why did he decide to use a reducing balance method to depreciate it? Okay. So first of all, if you know that RBM is only useful for the technological products, technological non-current asset. And if you remember that most of the time, if you see that RBM is only used for has been only used for the machinery and for the vehicles. So we know that vehicles and machinery both basically uh, technological products. And why we are using RBM for that? Because our non-current asset, which may be facing a very rapid technological change. So for them, basically, we are using reducing balance method because this will be decreasing your worth of asset at the start of the year with very high amount, but with the passage of time, it will be decreasing with lower amount because at the end of the year, at the end of the time, or you can say that at the later years of your non-current asset, repair and maintenance cost would be increasing, and that's why you are charging lower depreciation. And at the initial year of non-current asset, because there is no cost for repair and maintenance almost, so that's why we will be charging through RBM the higher depreciation. So basically, we are just balancing both things. But the thing is that the main thing is that we use the RBM just for the products which may be technological, maybe have facing rapidly changes in technological things. So A options can be the right option. B, non-current asset will lose value faster in the later years. So we know that in the RBM, in the later years, in the RBM, it will not be losing its value faster. So this is not the right option. Benefits from using the non-current asset will be lower in the earlier years. This is not the option. Cash set aside to replace. Okay, so this is almost wrong because we don't charge the RBM or any depreciation rate or method just because we just want to kept the cash set aside to replace a non-current asset in the future. So this is not the right option. This is not the right option for any method of depreciation. So A option is the right option. 20. What is not a service business? Computer repair service is a service business. Furniture factory, this is not the service business. Hairdressing salon is a service business. Travel agent is a service business. So B is the right option. Okay. Which two errors had he made? Okay, so closing inventory and depreciation charge. So let's see. Okay. Mm, Vikram made two errors when preparing his draft financial statement. These caused his gross profit to be overstated by 600 and his profit for the year to be understated by 250. Okay, so now let's check it. First of all, they're talking about the closing inventory and the depreciation charge. We know that closing inventory is related to GP and depreciation is related to profit for the year, or we can say that related to expenses. So depreciation will be affecting the profit and closing inventory will be affecting the GP. Okay, so we know that if, because here you can see that gross profit is overstated. Okay, so it means that if our closing inventory, if our closing inventory is overstated by $600, so it means that our cost of sales will decrease and our GP would be overstated, because whenever a cost of sales decreasing, so our GP would be increasing. So that's why if your closing inventory is overstate by 600, so it means that it will be causing GP to overstate by 600. Okay, so if the GP is overstate by 600, and if you see that your depreciation, it means that your expense, so your profit is understated, so your profit would be understated on only in that case whenever your expenses are overstated. So it means that your depreciation is overstated, and that is why your profit is understated. So if you see that 600 overstated GB amount, okay, and if your profit is basically understated by $250, so somewhere your depreciation basically was overstated by $850. So 650 minus 850, so it will be giving you minus 250. So that's why here you can see that your profit is understated by 250. So the right answer is that closing inventory overstated by $600, and your depreciation is also overstated by 850. So B option is the right option. Okay. So question number 18. Which asset is valued at the lower of cost and RNRV? So we know simple, this is the inventory. Okay. So in 17 question. So in the 17 question, this is related to mm, okay. Just give me 1 second. Okay. So 17 question. Business maintains provision for doubtful debts is 5% of trade receivable. Balance on the provision for doubtful debts account on 31st December 2018 was 2700. So this is a provision for the last year. On 31st December 2019, trade receivable amounted 50,000. How will the required adjustment to the provision for doubtful debts to be recorded? Okay. So as you can see that here the provision for doubtful debts account is written and income statement is written. So just remember one thing, that whenever your provision, whenever your there is decrease in the provision, so your provision would be debit. And whenever there is a decrease in increase in provision, so this would be, if this is increasing, so it would be credit, and if this is decreasing, it would be debit. And in the income statement, if the provision is decreasing, so it would be credit. Okay, and if the provision is increasing, so it would be debit in the income statement. So now let's see. Okay, so just find out first that what is the provision for this year. So 50,000 multiply what was the rate, which is 5%. So this would be equal to 2,500. So basically 2,500 is the provision for doubtful debts. So previously it was 2,700. So it basically has decreased by $200. So if it is decreased by $200, so it means that your provision would be debit by 200, and your income statement would be credit by 200 because this would be the income for the income statement. That's why. And we know that it will be added in the GP. So uh, C is the right option because here the provision is adding by 200 and 200 is basically added in the gross profit. Okay. Okay. Following ledger account appeared in the books of trader, rent receivable account. So we know that rent receivable account, what mnemonic we will be using for it. A, P, this is the income account. So A, P, P, A. It means that if the balance BD is accrued, so it will be coming under the debit side. And if the income is prepaid, so it will be coming under the credit side. If balance CD, it means the closing balance of your rent receivable account is prepaid. So it will be coming under the debit side. And if your balance CD is basically accrued in income account, so this will be coming under the credit side. So basically, the question is that what does the balance of 300? It means they are talking about this one on 31st December represents. So this is the accrued income. So we know that accrued income is the income means that we have given the services to our customers, but we didn't receive any amount from them. So it means that this is the accrued income. So simple. B is the right option. Okay. Question number 15. Okay. After the preparation of his financial statement, a trader discovered the following errors. The first one is a revenue receipt of 1000 had been recorded as a capital receipt. Okay. First of all, let's see their requirement. What was the total effect of these errors on the profit for the year? What was the overall effect of these errors on the profit for the year? Okay. So revenue receipt of 1000 had been recorded as a capital receipt. So it means that we understated our profit. No, sorry, we overstated our profit because this $1,000 should be deduct from in the expenses, but we didn't record in the expenses, so that's why this is overstated the profit. So it means that this should be deduct from the expenses now. Capital expenditure of 8,000 had been recorded as a revenue expenditure. Okay, so as you can see that the capital expenditure of 8,800 had been recorded as a revenue expenditure. So it means that we have increased our expenses. So that's why we have decreased our expenses by deducting it. So minus, we have to minus 1,000 and add 1,000 and minus 8,000. Okay, 800, sorry. Because we are going to minus it, so that's why we are just using minus sign here. And because in front of the 1000 there is no sign, so this would be your plus sign. Capital receipt of 900 had been recorded as a revenue receipt. So as you can see that we again um, understate our profit by recording the expenses. So that's why we have to uh, deduct it. Capital receipt of had $900 had been recorded as a revenue receipt. So we recorded it as a revenue receipt. So it means that we overstate the expenses and we understate the profit. Okay. So what does it mean? Just give me 1 second so I can calculate it. Okay. So as you can see that in the question, they are saying that what was the overall effect of these errors. So they are talking about the effect of errors. They're not talking about the rectify it. Okay, so that's why we are not going to rectify it. So capital receipt of 900 had been recorded as a revenue receipt. It means that we deducted it from the expenses. So that's why now again we have to deduct it from here, 900. So minus minus plus 1800 is equal to 1800 minus 900. So it means that we overall overstate. Um, yes, we overstate. So basically, we overstate our profit. Uh, Sorry, we basically don't overstate. We understate. Okay, we understate our profit by the $900 because we recorded capital expenditure as a revenue expenditure, again the capital receipt as a revenue receipt. So it means that we overstate. We sorry, understate. What is happening with me, sorry. So basically we overstate the expenses and understate the capital profit. So that's why D is the right option. Okay, question number 14. Business bought two assets X and Y on 1st January 2020 for $2,000 each. It depreciates asset X by 10% per annum using the straight line method and asset Y by 10% per annum using the reducing balance method. Okay, which statements are correct? Assets X will be fully depreciated before asset Y. Okay, for asset X and for asset Y. For asset X, we are using the SLM. Okay, and for asset Y, we are using the RBM. So we know that straight by using the straight line method, your asset will be depreciate faster than the RBM because in the straight line method, your asset will be depreciated by the same amount in each year, but in the RBM, your asset would not be depreciated fully with zero amount. So that's why we can say that yes, X asset X will be fully depreciated before the asset Y. In 2022, the depreciation charge is lower for asset X than for asset Y. So it's not like that because we have purchased this asset in 2022, both of the assets. So we know that in the straight line method, we will charge depreciation on the cost. And in the RBM, in the initial year, it means in the first year, we apply the rate on the cost. But for example, this is only for first year of the asset. But for example, if this is the second year, so we have to apply the depreciation rate on the net book value of the asset. And how can we find out the net book value? Cost minus the previous year depreciation. Okay, so we will be finding a net book value. So it means that in the first year, depreciation charge would be same for both of the asset, not in 2021. Depreciation charge is lower for asset X than for asset Y. Both will be having same depreciated amount. So it means that C is true and uh, this is false. So C option is the right option. Okay. 13. Sale at the control account had a debit balance of 10,000. Okay. It was found that a 2000 contra entry to purchase ledger control account had been entered on the wrong side of the sale ledger control account. Okay. So basically, we have to enter, we know that in the sales ledger control account, contra entry to purchase ledger control account had been entered on the wrong side of the sale ledger control account. Okay. So basically, we know that the SLCA contra entry would be recorded here by $2,000, but we recorded it here on the debit side. So basically we have to correct it, we have to rectify it. So when we rectify it, so we will be writing 4,000 here because we have to make this entry by double amount. Because if we make with the same amount 2,000 here to here, so this would be cancelled out with each other. So now 10,000, 10,000 minus 4,000. So your corrected amount would be 6,000. So A option is the right option. Okay. Question number 12. What is not a reason of preparing monthly sale ledger control account? Not a reason. Okay. So to carry out a check of each entry recorded in the trade receivable account in the sales ledger. So basically, we not carrying out the check of every inventory recorded in the trade receivable account in a sales ledger because we compare the trade receivable account. It means the sales control ledger account with the prime books, not with the sales ledger, the individual sales ledger. So this is not right for the SLCA. To reduce the fraud, as a control account is completed by someone who has not been involved in writing up the sale. Yes, this is the right reason. So, but here again, they're talking about not a reason. So this is a reason. So that's why we are taking it. To prove that the entries made in the sale ledger are arithmetically correct. Yes, this is also right. To provide a summary of the trade receivable transactions during the month. Yes, this is also right. Because through sale ledger control account, when we finish with it, we will be transferring its amount in the trial balance. So D option is the right option. So it means that which is not a reason, which is A. So A is the right option. Okay. Question number 11. Colin's cash book showed a debit balance of 2134 in the bank column. When Colin compared his cash book with his bank statement, he discovered the following. What was the closing balance on the bank statement? So what was the errors? So let's see. First of all, let's see, write the cash book balance, which is 2134. Okay, a standing order paid in error by the bank. So what does it mean? It means that there is a standing order which you have paid, but bank didn't record it. So it means that uh, maybe if the bank is not recorded, so we have to deduct it because after some time this will be deducted from the once the bank would be rectified this error. Unpresented checks, which is 536. So because we know that these unpresented checks is not included in the bank statement, because unpresented checks means that your supplier didn't present in the bank. So it means that this 553 is not taken out from the bank. So that's why we have to add it because we basically trying to find out the bank statement balance. Uncredited deposits, which is 376. Uncredited deposit, which is 376. So basically this is not added by the bank, so that's why we have to deduct it. It is added by you but is not added by the bank because this is still uncredited. So that's why it means that we have to deduct it. Just find out the bank statement balance. So 376 minus, so 2134 minus 80 plus 566 minus 376. So we will be having the total balance in the bank statement, which is 2241. So we know that in the bank statement, if we have the plus, it means if we have the debit balance. So for the bank, it would be carried balance. So that's why we are writing it carried in front of this. So 2241 carried, C option is the right option. Okay. So trader has received her bank statement. What does she need to record when she is updating her cash book? Okay. Bank error. So this is a bank error. This would be recording in the bank BRS, not in the updated cash book. Credit transfer. Yes, this can be recorded. Why? Because we don't know about this credit transfer, but your bank has recorded it. And uncredited deposit. So you have recorded it, but bank doesn't. So that's why you don't need to record it. Bank statement balance. So again, bank statement balance is the responsibility of the bankers, not ours. So that's why this is not the right. So B option is the right option. Credit transfer. Okay. Totals of trial balance did not agree, and a suspense account was opened. It was later found that purchaser return 560 had been debited to the sales return account. Okay, so we know that our purchaser return would be carried. Purchases return should be carried. Okay, but we debited to the sale return account. So we debit a sale return account. So what does it mean? Now we have to credit the sale return account by the same amount, which is 560. So where there is nothing on the debit side, because all these two entries basically crediting, so there should be something on the debit side. So where there is nothing, there would be suspense. So that's why 560 is equal to 1120. This would be entering into the suspense account. So this means the D option is the right option. Suspense 1120, purchase return 560, sale return 560. Okay. Question number 8. A trader introduced an additional capital of 4,000. This was debited to the capital account and carried to the bank account in error. Okay. What is the effect on the statement of financial position of correcting this error? So basically, in our capital account, we know that our capital should be carried, okay, with the 4,000. And our bank account should be debit with the 4,000. But the thing is that we basically recorded 4,000 on the debit side in the current capital account, and in the bank we recorded 4,000 on the credit side. So now we are going to rectify it. So if we want to rectify it, so we have to write 8,000 here, just because if we write 4,000 here, so it means that 4,000 debit, 4,000 credit, so it will be cancel out each other. So that's why we have to make the entry by double amount. And same with the bank account, we have to write entry in the credit side with the 8,000, sorry, debit side. um, we recorded it mistakenly on the credit side, but now we are going to make entry on the debit side. So previously it was on the credit side by 4,000, and now we have to make entry here with 8,000 with a double amount. So it means that your capital would increase by 8,000 and your bank would be increased by 8,000. So D option is the right option. Okay. 7 question. What is the name given to list of ledger balances on a particular date? So this is very easy. The ledger balance is just called the trial balance, not the statement of account, not the income statement, not the control accounts. 6. Business sold goods with a list price of 50 each. Terms of trade were as follows. Trade discount when more than 20 items are purchased, 10%. Cash discount if customer pays within 30 days, will be offering 4% cash discount. How much was received in full settlement from a customer who bought 25 items and paid after 35 days? Okay. So this is very easy. So we purchased 20 items. No, sorry, not 20, 25 items. Okay. So as you can see that in the terms, trade discount would be offering if anyone purchase more than 20 items. So this customer purchased 25 items. So it means that that person will be having 10% trade discount. And each good was $50. It means 25 multiply 50. Uh, this would be 1250, and now multiply it with the 10%, which is trade discount. So this is giving you the trade discount, which is 125. So now deduct 125 from this amount. So it means that we have to give invoice, which is 1125. So as you can see that this person paid after 35 days, not within 30 days. So it means that that person would not be having 4% discount. So it means that he was only eligible for the trade discount, which is 1125. So C is the right option. Okay. Question number 5. Paul rents premises from John and pays the rent by the credit transfer. How would John record this? Okay, Paul rents premises from John. Okay, so he pays the rent and Paul rents premises from John and pays the rent by credit transfer. How would John record this? So because John received the amount from the Paul, so it means that bank would be debit, and because John basically receive that amount for the as a rental income, so it means that income account will be carried, so it means rental income. So as you can see that rental income is also in the A option, so it means that A option is the right option. Question number 24. That's 4, sorry. Sammy maintains full set of accounting records. Why does Sammy find it useful to complete the check counterfoil when he pays a credit supplier by check? Okay. It enables him to keep the purchase account up to date. No, check counterfoil is not for that. If you just want to enable to keep purchase account up to date, so you should make it purchase ledger. It helps in preparing the bank reconciliation statement. So it is not related to bank reconciliation statement. You are paying them by check counterfoil or by check. So it means that for the BRS, this is not the helping. So this is not the right option. It is source of information for maintaining the cash. Yes, this is a source. This is a source document if you know about it. Check counterfoil, debit note, credit note, invoice, receipt. These all things are basically the source, the document source document. It is proof that he has paid the correct amount. No, it is not the proof, because somewhere maybe uh, it is like it can happen that maybe you put wrong amount on the check counterfoil. So check counterfoil is something which you can just keep for the source of information. Simple. Okay. Question number 3. On 31st December, Manjeet was owed commission. Okay, owed commission. So how would this commission be shown in Manjeet's name and financial position on 31st? So if Manjeet owed commission, so what does it mean? It means that um, there are some commission income which Manjeet have to receive from the customer, but he didn't receive yet. So that's why this would be the accrued income, and it would be recording in the current assets. So this is the right option. This is accrued income, but because accrued income means that you have to, like, you will be receiving this payment after maybe after some later days, but because this is the amount for which you have paid or which you have give the services to your consumer, but you didn't receive the amount, so that's why this would not be the current liability, this would be the current asset because you can claim on it. So that's why, so A is the right option. Question number 2. Amarjeet had the following closing balances in his books at the end of the financial year. So we have this closing balance. What was the Amarjeet's capital at the end of the year? Okay. So this formula is same. Assets minus liabilities. So assets is equal to 25,000 plus 11,000 plus, and 3,000 plus 6,600. So 3,000 plus 600 is equal to 3,600, and 25,000 plus 11,000 would be 26,100. So if we deduct these, so you would be having okay. So this is, you will be having 32400, 32,400. So C option is the right option. Okay, and the last question, question number 1. Which statement but about bookkeeping and accounting are correct? Okay. Accounting is performed periodically rather than daily. Yes, we perform the accounting periodically. It means after a certain period of time. Accounting uses information kept in bookkeeping records. Yes, for through bookkeeping, we use the accounting information. Bookkeeping includes the preparation of financial statement. No, bookkeeping is only related to preparing journals and cash flow. Bookkeeping involves the recording of financial statements. So yes, in the bookkeeping, we record the financial transactions. So yes, we record the financial transaction in the bookkeeping. That means that 1, 2, and 4. So A option is the right option. So I have done with all the questions. So I hope you like this video. If you like this, so you can share this video with your friends who may be having their O levels accounting and IGCSE accounting papers near on 30th May. And just share with this video with your friends and subscribe to my channel. Goodbye.